Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea. Tough decisions today on who to cover. Just some great conversations out there. We'll get to John Stoltzfus with Oppenheimer Company in a moment with his call of 7100 on Standard & Poor's 500 in a real optimistic tone. What a joy to hit today to have truly a legend, Chuck Clough, with his own shop up in Concord, Massachusetts, definitive with Merrill Lynch for years, and sometimes very cautious on the market, but shockingly optimistic on the quality of profit and the quality of cash flow. We looked at growth and we looked at value with Chuck Clough. Does value do well only when there's a bear market? Do you need a bad market for value to do better than growth?
I would say no. I think there's a tendency to move towards things that people think are value. I would say the most important engine of a value company is that it generates free cash flow and can start to collapse the capitalization. The most important thing, if it's a mature industry, you'll be generating cash flow because you're not investing. Right. If you're generating cash flow and can move the capitalization to a point that it's still efficient, that will make you money in a value stock.
Are you worried about the accounting for all this CapEx investment in AI? If we have some form of write-down or depreciation of it in a normal sense, do you believe the math now, like Paul and I believe the math in February of 2000?
Well, I think the point about my hyperscale is they generate huge amounts of cash flow. The dot-com companies didn't, with one exception, and two exceptions. That was Apple and Microsoft.
And Chuck Clough there of his own shop, Clough & Company up in Concord, Massachusetts. John Stoltzfus was with us today, much more into writing a weekly note about where are we in the market. John Stoltzfus reaffirming optimism.
We've got earnings growth up 11.7% on back of 8.1% revenue growth. You've got tech 24% growth year over year, financial Q3 year over year 23.9, so that's another 24 piece. You've got materials double-digit growth, industrials double-digit growth. This is looking pretty good, and the single digits aren't bad. And you've only got two sectors with negative growth. That's energy, negative 2.26% on the screen, and communication services, 8.19%. And that some of that may be the result of just incredible investment at a watershed period related to AI technology.
John Stoltzfus, he has been ardently optimistic on the market, even with some of the stresses over the last number of years, and he reaffirmed that today. On podcasts, we're out at Apple, we're at Spotify, on YouTube podcasts. It's Single Best Idea.